Well, China has been quite successful in attracting European, American, Japanese investment. I mean, look at the data you have. It's $100 billion a year. So the question is, as we look into the back mirror and seeing this huge success of these companies in China, are we going to be successful in operating and investing in the future? And that's a big challenge. As I was chairing the European Chamber for a couple of years in China, we found more and more problems there. But from the Chinese economy point of view, GDP growth for the next year is 7 to 8%, 10 years at least sees this growth pattern. Sure, China's going to be the factory of the world, and we're all going to be very eager to be part of that. Well, while I started as chairman of the European Chamber, the position paper which outlines the issues that business sees in China was about 300 pages. When I left 3 years later, it was around 700 pages. So it not only shows that there's more complexity into China, in the Chinese system, but also that there's something wrong in the investment climate. And we have been very adamant about this and talking about this to the Chinese government officials. Yes, there is quite a number of issues on licenses, on standards, on IPR and so forth. And many of our companies actually see more complaints, but against the backdrop of better business, more business, and actually higher profitability, it's sometimes hard to argue that actually we are left behind in some areas. So all in all, the market is growing. We have a sizable stake of this, but percentage-wise we are shrinking, and access to the market is certainly more difficult by now. Well, inflation is a temporary thing. I think there's a lot of balloon in the newspapers. Certainly the government in China also adds to this by being very cautious and cutting down on prices and so forth. But it's going to peak at 5 to 5.5% and it's going to then go down. So we don't have any South African 10, 20, 30 or 100% inflation. It's an immediate thing. It's not going to have any major constraints on investment for the time being. But it will remain structurally. China had deflation for 10 years. China was responsible for the low price development all over the world. Now with this structural inflation of somewhere between 2 or 3 or 4%, depends on which year, China will contribute to inflation in the year. Globally, that's a big change. The renminbi is going to strengthen as the yen did in the 70s and 80s. There is absolutely no doubt about that question. So while the renminbi is going to rise, it has three impacts that I immediately see. One is the Chinese consumer buys more foreign stuff. So Europeans will be happily sending luxury goods, food or more chemicals into there. Likewise, the US will see more opportunities. China will turn more into the consumption story. Secondly, of course, China will have more firepower to buy oil and gas and iron ore. So for us all in other parts of the world, it's going to be more expensive. As China grows stronger, they have more money. So the third reason is China will be more able, with a stronger renminbi, to buy companies and assets in Europe and the US and Japan. So we will see definitely a massive increase of Chinese investment in the Western world, and I wonder if our politicians are ready for that.